CVS announced earnings pre-market, and at the open, we had a gap down, only to see price move up almost $5. So was it on great news? You would think so, right? On the weekly chart, you can see what is a hammer formation type candle, although it is only Wednesday, so anything can happen towards the end of the week as we have farm payroll coming out for the month of July. So let's get into the earnings before we continue the analysis. This article is coming from Yahoo Finance by way of Reuters. CVS Health cuts forecast on higher medical business integration costs. So maybe the stock was oversold. CVS Health Group lowered its 2024 adjusted profit outlook on Wednesday due to higher than expected medical costs and expenses related to the integration of its recent acquired businesses. The company also withdrew its 2025 adjusted earnings per share forecast of $10, sending its stock down more than 1% in early trading. CVS now expects 2024 profits between $8.50 and $8.70 per share, compared with its previous forecast of about $9. CVS maintained its 2023 adjusted profit forecast of $8.50 to $8.70 per share, but it said it expects its medical benefit ratio, the percentage of claims paid to premiums collected, to be at a higher end of its outlook of 84.7%, plus or minus 50 basis points. Now, CVS is not the only company undergoing these higher medical expenses. You have larger rivalries such as United Healthcare, Elevance have also cautioned of a spike in medical costs this year, after a rise in demand for elective surgery such as hip and knee replacement rose, which older patients at higher risk of COVID had to delay during the pandemic. Nevertheless, stock is moving higher. Now, let's go to the monthly chart. And what you can see is the chart suggests price bottomed at $68. So it put in a low, and now it's up roughly $10. My eyes point to this most recent wick. You have $80 where you had support, resistance, support, but I'm going to ignore all that for now. My eyes is targeting this $80 level. And why I'm targeting that level is because if price can close above $80, there's clear runway up to $88. All right, let's scroll down to the weekly chart. And what we saw on the monthly, we can see a little clearer. You have this roundabout price action, which put in the bottom. You also have the 13 simple weekly moving average pointing up, which is going to serve as dynamic support. Yeah, price is heading to 80 based on this momentum. Now looking above, I had mentioned $90. That would be a next target. That's also a round hole psychological number. All right, let's go down to the daily chart. All right, so 80 becomes a target. You have the 200-day moving average, which is going to serve as dynamic resistance. So this is a nice target. So what happened? Price filled the gap? Not quite, because we never got a close. That's a real gap fill. Wow, prices have just been on the move. You have a little level of sellers at 80 as well. You had a drop in price, one basic candle and a drop. Yeah, this is a nice target. Look for price to continue to move higher. However, we potentially can get a sell-off or a breach of this level on Friday. Again, U.S. non-payroll report comes out for July. That's going to be a market mover. Thanks for watching. Subscribe. Please like the video.